All righty. Thanks, everybody, for taking some time to join. You have John Boykin and Brian Carney from PHI Insurance and Blue Rock River's Edge here to talk about the payroll protection program. And obviously, we were originally scheduled to have this a few weeks ago, and the first round of funds quickly ran out. So we wanted to pause until we had confirmation of additional funds, which have happened. So we wanted to talk about this. So again, we appreciate everybody taking a few minutes. And if you have any questions, feel free to send them in through the chat. Use the raise hand function, or every few slides we'll ask if there's any questions, and we'll do our best to answer them. See here, Brian, I'm gonna unmute you.
Yep. All right. Well, thank you everyone again for jumping on. So the one thing that we've noticed about the EIDL and the PPP loan program is that it is rapidly changing, with information coming out almost daily and sometimes hourly that changes how this plan works. So what we're going to go through is we're going to go through the information as we understand it now, which certainly could change. It's already changed a little bit since the first round, but in the second round, there's a $484 billion through this stimulus package, and it's broken into two different groups. First is the PPP, and then the Economic Injury Disaster Loan Emergency Advance, or EIDL as we're calling it. So of the $484 billion that was signed in the second round of stimulus, $50 billion has been allocated to replenish the EIDL. And the EIDL is for any business that's suffering any sort of economic loss is able to apply for this. They're calling it a loan, but it's really essentially a grant. And you're able to get approved for up to $10,000 worth of money. And it provides any economic relief to businesses experience that loss in revenue. One of the changes that happened from the time that this program was first rolled out to through the first round and now into the second round is that initially you were able to get a maximum of $10,000, and they've limited that to a maximum of 10 grand, but only 1,000 per employee. So if you only have 6 employees, the maximum you can get is $6,000. One of the other things that they did for the second round is they actually got farmers and agriculture businesses first in line to get this money. So they were able to get through first. So we do recommend that you apply for this. When we applied for it, we actually applied for the EIDL and the PPP loan on the same day. And we actually got the EIDL money probably 7 to 10 business days after. So this is for any business that has less than 500 employees. You can have over 500 employees if you're within a certain industry, but it does also include sole proprietors, independent contractors, and self-employed. So the funds will be made within days of the approval, but I mentioned earlier that this is really a grant. It's not a loan. They're classifying it as a loan, but it is a grant that will not have to be repaid. So if you go to that website there, you can apply. And we've actually screenshot on the next couple of slides, we've screenshot how simple and straightforward the application is. It asks you literally a couple of questions to make sure that your business qualifies, and you know just to review and check any of the following. Then you have to add in that what your business name is. If it's a nonprofit, there are some restrictions for certain faith-based organizations. Asks you some basic gross revenue information, cost of goods sold, if you have rental properties, and other than that, you add in your bank account information, and pretty much it gets sent to the SBA for approval, and once you get approval, the funds will show up in your bank account within a couple of days. So I'm going to kick it back over to John to start the Paycheck Protection Program.
Thanks, Brian, and thanks for explaining that. Yeah, the payroll protection program, I think that's obviously the larger part of this, for the larger amount of funds, and we're on the second round of this now. But it was designed to provide direct incentive for small businesses to keep their workers on payroll. And the maximum loan is $10 million. And there is, as many people have talked about this, and again, there's still clarification to be had about the forgivable part of this, but the SBA will forgive portions of the loans if 75% of your employees are kept on payroll for 8 weeks, and the money is used for payroll, rent and or mortgage, interest, and utilities, and at least 75% of the total funds used are for the payroll. You must work through a bank to secure the funds, and each of the banks have slightly different applications, but the SBA's put their application up front. This is what the application looks like. Again, similar to the EIDL, very simple application process. And again, this is for loans up to $10 million. So very simple process. And there are some worksheets that are out there to help kind of guide you through the process. Summary of the first round, and this was, within about a little over a week, that there were over 1 million loans. And again, this was at that time was $247 billion. It ended up capping out at the $350 billion, and almost 5,000 lenders were involved in that. This is a breakdown of the states and territories for the first round of the payroll protection program. All of the states, the different loans that we were approved. So in Delaware, nearly 2,000 loans were approved for nearly $600 million. So again, this is something that, even there are some businesses that have remained very strong throughout this process, we are still recommending clients to evaluate this and submit for it, because again, with the forgivable amount, it makes a lot of sense, and it's essentially free money that will, I guess, all of us will eventually pay back in tax dollars, most likely. A breakout of the loan, the average loan size was $239,000. And again, we look at the breakdown that 70% of the total loans were smaller loans under $150,000, and then obviously as it goes higher and higher, the percentages get lower and lower. There were a lot of several really publicized loans that went out to very large corporations, large restaurant groups, because there were some caveats in there for restaurant groups, as long as they were under 500 employees per location. Didn't matter how many locations they had. So some of those have fallen under pressure and have given those funds back. And again, another breakdown just based on the number of trades and where everything went by NAICS codes. Here is a very good representation of the worksheet that helped to develop the loan amount. Again, a very simple process, but really what we're looking at is, when we're talking about payroll, we're talking about salaries, wages, commissions, and this is capped at $100,000 per employees, excluding payroll taxes. It's going to include tips. It's going to include vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, group health benefits, including insurance premiums, retirements, and then the state or local taxes on the compensation. So when you look at the example here, where the normal wages are $200,000 for that second quarter of 2019, when we add everything else in, we're looking at over $270,000. So again, it's a significant portion that we're able to get with this loan. And then when we look at the forgivable portion of it, when we're predicting out what we're going to be for the next 12 months, in this particular loan scenario, the payroll costs were estimated at $133,000 from that. Again, this is the additional worksheet that is on there for qualifying and then to determine the forgivable portion of the loan. And this is how the loan calculation works. So to give you a good understanding that the total payroll costs, the average of the last 12 months for this particular example, were $133,000. There is a 2.5 times multiplier to develop what the maximum loan amount was. So in this case, that came to $333,318. And again, the expected forgiveness for the 8 weeks from the time you receive the money was $133,000. And then the loan payable, which is payable over 2 years at a lower interest rate, would be $199,000. So, no, Brian, we're gonna both of our firms have applied and received this loans. I know we were going to take some time to kind of go through what we experienced. For those of you that have not done this yet, kind of give you some ideas. It is a simple process. It's also a somewhat complicated process because a lot of what is going on here isn't really determined yet. What is going to be considered forgivable? We've seen questions over, can you bonus people? What if you give somebody a raise? Does that all come in? And there's still some answers to be had. So, Brian, if you want to maybe add in some details that on your experience here.
Yeah. So one of the things that we'll talk about in a minute is the banking relationship that you chose is pretty substantial, and it's really important. And in fact, in the second round, about $60 billion was carved out and specifically earmarked for smaller banks. So we actually went through a bank called Bancorp. We're in the investment management business, and some of our clients get what are called securities-backed lines of credit on their investment accounts through Bancorp. So they treated us as we were one of their clients and one of their customers. But they were extremely responsive. And one of the things that we did is we actually, and you'll see it down at the bottom here, we actually sent our application directly through the portal, and then we sent it directly to the representative as well. So to make sure that everything was able to be easily available to the bank. So our banker was actually able to look through things and say, hey, you're missing this. Hey, you're missing this. And she was able to help us upload it to the portal. So it was really helpful to have another set of eyes, especially from the bank side, knowing actually provide insight and make suggestions. Also, the numbers are really important. You know, the more employees you have, the better off you're going to be from the amount of money that you're going to be able to get, but it also makes the calculations a little bit more confusing. So one of the things that we made sure we helped our clients with is if they had profit sharing plans with 401k plans or even a cash balance plan, for example, we were able to help them add all of that information in as part of the money that they were able to get. So your payroll reports are incredibly important. One of the other issues, and the way that we're viewing and the way we're interpreting what the rule is that it's not necessarily your current payroll, it's your current head count. So if you have 10 people on your payroll right now, the way that we interpret the law is that they're not going to check to make sure that you have the same 10 people, but that you just have a payroll or you have a head count of 10.
Correct. So, yeah. Or we have situations where people have brought all the employees back, but at reduced wages. But again, you're still looking at the number of people that are actually on there.
Yep, exactly. So, and if you keep that head count number to 75% of what it was prior to getting the money, theoretically it could be forgiven. We also called the SBA 800 number. Now this is back on April 15th and things were pretty crazy then, but we were 1,036th place in queue. And once we finally got through to the representative admitted that he knew almost nothing about the plan. And he was just sort of there to kind of just answer the phone. So you really do need to have a significant amount of patience, and you really have to stay on top of them to follow up. We were following up with them we probably annoyed them a little bit, but we were following up with them very regularly to be sure that everything was being processed and to make sure that we weren't missing any information.
Yeah, in our experience with we submitted ours through our bank with WSFS, and we had a different situation where I think we experienced WSFS delayed a couple of days until they started accepting applications. But having a significant banking relationship with them and having a point of contact, we submitted all of our information directly to them, and that person essentially helped guide us through, and we received the approval later that evening. So I think leveraging the existing banking relationships that you have. While there are other banks that you don't necessarily have to bank with somebody to submit these, but I definitely, from experiences that I've seen personally and a lot of my clients, that having that existing banking relationship is definitely going to get preferential treatment as far as the processing of this paperwork. And again, when we're looking at going through the second round of funds here, there's no guarantee that there will be a third round. So I highly recommend getting on board with this. If it's something that you think you may want to do, I would definitely recommend taking advantage of it now while we can.
Agreed. So the second round, which was just approved, I guess a week or two ago, like I mentioned earlier, it has 484 billion available, and there's 60 billion that's earmarked for the community and small banks. So one of the frequent questions that we've been asked are, can you submit 2 applications? So let's say I applied through WSFS and I'm not hearing back from them, for example. Can I apply for it through a different bank? Again, differing information exists out there, but the way that we interpret what's going on is, once you get in the queue and your application has been submitted, you will get a PLP number, which is a preferred lending partner number, and that number is linked to the business's tax ID number. So most resources that we found said, yes, you can. And in the event that you're getting a little bit of a runaround from your current bank, you should apply for two different places. So there was some argument that there could be fraud triggered. So you have multiple applications going in under the same tax ID, but as soon as that application goes in and gets accepted, you get that preferred lending partner number associated with your tax ID, and then that will shut down any other applications from going in under the same tax ID. So according to some of the resources, the risk for fraud is low because the SBA will be able to cut that off. One of the other things that we saw is that now some online lending institutions are eligible for the PPP loans. So like PayPal or Cabbage or Lendio. So, some people may not have heard of Cabbage, for example, but Cabbage typically offers businesses some short-term lending, and they actually have a portal now to be able to offer the PPP loan. One of the things I was reading about and in just talking to our clients, banking relationships are primed to be changed. I talked to a client yesterday. He owns a small medical practice, and he was working with one of the regional banks, and he checked every day for the portal to be open. And he called one day and they said, yeah, sorry, we were only open, our portal was only open for a matter of hours before we had to close it again, and we reached our capacity. So he missed out on that opportunity to be able to apply. So Forbes, prior to all these PPP loans going out, said that 6 out of 10 people utilizing a mega bank or a large regional bank are somewhat or very likely to switch banking relationships. I think that number is going to go up. So you may have seen some of the things about some of the large mega banks where there are issues with them front running larger loans and putting the smaller loans on the back burner due to the fees that are generated back to the bank. So that is one of the issues that could arise. I read an article about there's a bunch of FAQs on the SBA website about the PPP. And question 31 is pretty important because we think that could be one of the things that really starts to change and it deserves further consideration. So do businesses owned by large companies with adequate resources of liquidity to support the business's ongoing operations qualify? Said another way, if you have the money in your coffers and you took the money, is that going to be able to be forgiven? So right now they're targeting the large businesses that John mentioned before, those large restaurants, or like, for example, the Los Angeles Lakers took a bunch of money too. I think they're really trying to cut down on those large companies taking money out of the small business pocket. But that is a murky area that we think that when it comes to being loan forgiveness, that's where things are going to get really kind of become a real challenge. How are you going to be able to track the money that you got to make sure that it was used for the expenses that you specified that it would be? So loan forgiveness, I think, is really going to be an issue. From what we understand, the SBA was sort of mandated to get the money into the hands of the bank, to the business owners as fast as they possibly could, and worry about the forgiveness part later. So that's where we think a lot of the scrutiny is going to come in, where you're really going to have your numbers and your paper trail solid to make sure that that loan is going to be forgiven, and they can easily follow the dollars. And our practices, both my practice and John's, we deal with restaurants and dental and medical groups. They're really we keep calling it the gap. There's a PPP gap, and they are dead smack in the middle of it. And there's no real good advice or game plan for them right now. So one of the issues, we have a dental client, and he said, well, I've laid my people off, and they're now making more money on unemployment than they would be if they were working. So if I take this loan, and let's say Governor Carney says that we can't open back up until after June 30th, I've now taken this loan to rehire these people when they're making more money on unemployment. Now I'm paying them. So now I've taken this loan, and I'm not even open to start seeing patients again. So that is a real issue. And the same thing's going on in the restaurant industry. I was on a Delaware Restaurant Association call last week, and they're running into the same problem with unemployment, being some of their employees making more money on unemployment. So they're really struggling with whether or not to even take the money. And if they do take it, is it going to be forgiven, or are they going to be strapped with a huge loan payment that's going to be due? So the loan terms, if you're a for-profit business, it has to be repaid in 2 years. So now you're talking about taking $500,000, $600,000, $700,000 that may not be forgiven, and now you're going to have a big nut to crack every month from a monthly cash flow perspective. So it is a real issue that is going on, and that's really affecting a lot of our clients. So we'll see how that all shakes out, but it's really a difficult situation.
Yeah, I would add on to that, Brian, just being involved with the Delaware Restaurant Association as well. I mean, there is a lot of push to have the forgiveness portion modified to be more forgiving for those restaurants that are dealing with that. I was also on a call with Saran Cade from the Delaware Department of Labor, who mentioned that the additional amount of the unemployment is tied to the state of emergency, and that once the state of emergency ends, which tentatively is scheduled for May 15th, once that ends, that additional amount available on unemployment goes away. So that's their position on it. Obviously, there's one of the issues when you're dealing with things from the state and federal level is there's a lot of miscommunication, and there's a lot of different answers we're receiving. And I think that really ties into this last bullet point of the loan forgiveness process may be a huge challenge. I've heard everything from it is the bank will determine our forgiveness, and then effectively go back to the SBA to try to get the money from the SBA. I mean, there's a very confusing process on this side of it. And I think that the only thing that is very, very clear is that documentation of every expense that we're going to submit for forgiveness has to be very, 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 thorough, and make sure that we are dotting the I's and crossing the T's, and make sure that everything is there from a payroll standpoint, the expense standpoint. And I think that's something that we always, we should do anyway, but especially with this part of it, I think when we look at forgiveness and when we're working with the banks for that, I think having a clearer picture and having all the documentation absolutely will help that process.
And to go back to the one slide that we talked about, but where the money for the first round was broken down by state, Delaware was actually the state that received the fewest dollars as far as the PPP is concerned. So we came in last place as it applied to actually getting dollars to help the businesses in the state. So going back to the loan forgiveness thing, just another issue. We've had conversations with clients where they say, okay, well, what if I can't get to 75% of using the PPP money to pay for 75% for payroll, health insurance, and retirement plan in the qualifying areas? One of the things that you may want to consider is if you're in the past have done a profit sharing contribution in your 401k plan, you may want to use some of that money as a profit sharing contribution for the tax year 2020. Most of our clients don't fund their profit sharing plan for so most of our clients are max out their 2019 profit sharing plan in April of 2020. Some of our clients are going to be doing it throughout the year and by June 30th to be sure that that money goes in and is allocated for their employees. The money is still going to go to their employees. It's just messing around with the timing a little bit to help ensure that that 75% number is going to be hit.
Yeah, it's something very similar because it's when the expense is incurred. So we're actually having to pay one of our rent payments early to make sure that we have, even though it's 8 weeks, so it's 2 months, we technically would have only had one rent payment in that portion. So we're paying the one rent a couple of days early to make sure we incur that expense in that 8 weeks forgivable period.
Okay.
Let's see.
The only other thing that's on here is we added helpful resources. So these are just some interesting websites that have, so that we mentioned that frequently asked questions, that's right there from the treasury.gov website. The CPA journal that talks about, some of the payback issues. Whether you can apply twice is that bench.co, and then the Forbes is talking about the forgiveness nightmare as well. So John, I only wanted to take about 30 minutes. I know everyone's probably working from home or has some time on their hands. So we definitely, if you have any questions, we're happy to answer them.
I went ahead and unmuted everybody. So if anybody has any questions, feel free to ask them here, or also feel free to send us an email or through the chat feature in here, and we're more than happy to help.
Oh, there's a question.
All right. Can you count group health insurance payments for employees against PPP fund, especially for you by company check via payable system?
So do you mean when you actually physically write a check? Are you talking more along the lines of keeping the paper trail? Or are you talking?
What happened, like we do now, the insurance carrier, they, as an employer, they bill us monthly premium for entire policy. And we do portion like deduction, whatever employees share via each paycheck. It goes through the paycheck deduction. But we, as a company, as an employer, we paid that full amount, like let's say example, $7,000 for whole policy for each employee. So we pay $7,000 up front from the company check, and we start deducting each employee's paycheck for their share. So that amount, $7,000 a month, can we just deduct that against the fund we receive from PPP?
Oh, that's an interesting question. So when you filled out, I guess the question would be when you filled out the spreadsheet, did you count that health insurance as an employee benefit, even though you're sort of charging it back?
Yes. Well, as for the paperwork, actually, SBA, I mean, personally myself, I have not seen the paperwork yet, but I'm assuming like this will come down the road after that grace period of 8 weeks will end, right?
Yeah.
So that's where we need to fill in all this documentation. So
I'm on a call.
Yeah, being prepared, like I just want to clarify, like, okay, I read on the internet too, like, okay, your health insurance contribution can be also considered. Commission, 401k, as you mentioned earlier, this and that. So
yep.
This is the setup we have. So are we eligible to claim that full $7,000 amount or not? Because we already collecting back the portion from employees.
Good question. The way that I view it is, and the way that we understand it is that you would only be able to apply to use PPP money for the employer portion of the health insurance. So anything you're charging back to the employee would not count as a employer contribution. So you really would just want to stick with what you're doing.
It would be, it would be the net cost.
Yes, exactly.
Okay. So like whatever we pay out of our pocket, which is in our case, we do like split 50-50. So 50% employee pickup and 50% employer pay. So we can claim only 50% then, not the full amount.
Correct.
Okay, because other 50%, it's already counted towards the payroll cost, gross payroll.
Yes.
Okay, all right, thank you.
Yep. Todd, I don't know if you can see the chat. Todd Hudson, thank you. He said he completed the EIDL loan while he was on the call. He said it was very easy. I agree. It was very easy.
Yeah, and related to this EIDL question, I did apply on SBA, and we just got like 10,000 within like 4 or 5 days. But I heard, and I was reading some article, they said like this EIDL, this advance money, 10,000, it will go against PPP loan. Is that right? So like in another word, let's say if you get approved for 200,000, so now they will fund you only 190 as you already received 10,000 as advance. Is that right?
The way that I understand it is that they're really two separate issues there. So if you take if you take, for your example, if you take $50,000 and 40 and you're eligible for 50 and 10 of it is the EIDL, what you're saying is correct from the way that we understand it.
Okay, because I thought like these two are completely separate programs.
Yeah, and from the way we understand it, while they're two separate programs, that 10,000 is automatically forgivable because that's supposed to be a quick contribution. But what we can do is I'm going to double check that for you, and we'll get back to you on that.
Okay, sounds good. Thank you.
Yeah, definitely.
And one more point, like going back to the headcount requirement for forgiveness. I think, I don't know, I was probably on IRS or Treasury's website, and they are saying like you have to match full-time equivalent, same amount as before, not even 75%. So I'm assuming like it's considered as 100%. So from like, let's say May 15 through June 30th, 2019, or January through February 2020, if your full-time employee account was like, let's say 30, then within this 8 weeks, you have to have 30.
Yep.
Like that means 100% they are requiring, not 75%.
Yep. So I've read the same thing. And in talking with accountants and the way that they interpret what they said, they think that it's the head count at 75%, but it's not a make it or break it situation. So let's just say you dip below, you go from 100 down to 60. Well, they don't make the whole loan payable, repayable. It is a proportionate amount. So from the way that we're interpreting it, it is that 75% number. But I did see what you're talking about, where they said having the same number. But from all the other sources and people that we've talked to, including our own accountant, 75% is the number that with the assumption that they're operating under.
Oh, okay. So 75% is the minimum.
Yep.
Okay. So that's good. And one more last thing is like remainder 25% can be used towards your mortgage interest or rent or utility, anything. So this count any outstanding payments, right? Not the current, like whatever is fall within 8 weeks. So let's say if I have like pending 10,000 in utility bill, I can use that fund to pay that 10,000, regardless like what was the bill occurred, like it was accrued from, correct?
Correct. It's when the expense is actually incurred when you pay it.
I'm sorry, I couldn't hear. I had like a little breakdown. Like what was that, John?
Yes, our understanding is it's when the expense is actually incurred.
Okay, so if it is, well, okay, that's fine. So as long as that expense incurred before, I think it was February 1st or February 15th, right? As long as it incurred before that time, that should be okay.
Well, it's the 8 weeks from the time you receive your loan is what's forgivable.
Right. No, I mean, as for the remainder 25% share, like utility, let's say if I have outstanding utility bill from like February, like before February 15th, like let's say February 1st, and it's still, I'm not able to pay. And as soon as I receive money, I can pay that bill from that fund, correct?
Let me look into that. Hold on one sec.
Yeah,
Yes.
I think they're saying like it's not cash based, like it's kind of accrual based for that utility and mortgage interest and the rent payments. So I think as long as it incurred before February 15th, we can pay that whole bill.
As long as the utility services began before February 15th.
February
Yes.
15th, right? Okay, yeah,
Yes.
that's,
Right.
I thought like that, I read like maybe February 1st or February 15th. Okay.
February 15th.
Right,
So
okay.
it's interest on mortgage obligations, rent under lease agreements, and then utilities as long as they all began before February 15th.
Or sign the contract before that for rent. Okay.
Correct.
All
Going
right,
back to
thank
that,
you.
going back to that EIDL question, you just can't use the money for the same expense. So you can't double dip on it.
Oh, you mean that 10,000?
Yeah. So you couldn't theoretically get use 10,000 if you used money to pay for payroll. You couldn't use the EIDL money to pay for payroll also.
Okay, so let's say like I already received 10,000 for EIDL, and then down the road I will receive, for example, like 200,000 under PPP. So, and just like a recent example I was giving John about the utility. Now, let's say my utility bill from February 1st date is 15,000. So I can pay 10,000 from EIDL and remainder 5,000 for PPP. Can we split like that?
I'm going to double check that, but I think that you can do that. If you're not, if the bill wasn't 10,000 and you're using the same bucket of money to pay for the same expense, I think is what the real key is. So I do believe you can do that, but I'll check on that and we'll definitely get back to you.
Okay. All right. Thank you.
Yep.
All righty. I think, well, unless we have any other questions, we will wrap it up. And again, thanks everybody for taking a few minutes to join us, and stay healthy. And hopefully we'll see everybody back in a normal situation sooner than later.
All right. Thank you, guys. Thank you.
Take care.